lectures of July. This is going to be the real meaning behind time, price, delivery. I'm going to pull a reference from my Discord for this topic. Here we go. The real meaning behind time and price delivery. So I'm just going to speak very briefly on this subject. If you've not seen this image before, is the only 4 ways that price delivers. Now, I'm going to speak to you about each one, and then I'm going to speak to you about where time would come into play with this. So the first one, we'll start here, is retracement. So we break lower, we make a lower low, we then come up into your premium and discount / fair value gap, which is where I'd be looking to either long up to or to short out of, depending on where we're at 9:30. You already know how I trade, so I don't need to keep going on about the same thing. You know how I trade by now. If 9:30 opens here, I'm going to sell into it. If 9:30 opens inside of it, I'm going to buy out of it. So the same logic would apply. If this is 9:30, I'm going to buy into this area. However, if this is 9:30, I'm going to sell out of it. So I don't need to blab on. You know how I trade. Yeah. So we're either going to retrace, and this is what I mean, but sometimes I trade retracements, and that's fine if you know where it's going in the higher time frame, because you know where to take profits. Like here, we would have taken out some sort of ERL, come up IRL, back to ERL, because the draw on liquidity is lower. So we're not just looking at this low, we're looking at a further low in the higher time frame that the higher time frame is drawing towards. So not just this low as well, which will be on the bigger picture. So this is, I kind of want to make this picture bigger actually. This is the retracement side of price delivery. That'll do. The next is reversal. Now, all reversals will have a raid, then a break. I know it hasn't got the word market structure shift or breaker structure, whatever you want to call it, or CSD, but this light bulb represents the logic behind the raid and the break. So as soon as we raid, we're going to be in something higher time frame wise. I see this a lot of times at 9:30, and well, I don't want to talk about time too much, but yeah, you'll see this a lot. Well, every reversal you'll see this pattern, if you want to call it that. And see a high, low, high, high, lower, low, gap printed above, well, through this lower low, trade into it, trade out of it, targeting this low and this low, and then the further drawn liquidity low. So you're going to see this everywhere, okay? See retracement and reversal everywhere. Now, this is the reversal pattern, which is the raid and the break. But then we've also got the first price delivery that we spoke about in this move here. So let me shut my window. Yeah. Let me shut my top window as well. But yeah, that is the reversal signature, the raid, break, and retracement. So you're starting to see how all these price deliveries kind of line up with each other. Next one is consolidation. Now, easiest way to trade consolidations is obviously look for the turtle soup. So as long as our drawing liquidity is higher, all lows in consolidation, when it's finally ready to be manipulated, will be souped. However, this low will be protected because on the higher time frame, this would be into something more relevant. So like I was saying with this one, reversal, which has the retracement inside of it, the same happens here. So as you can see, the reversal happens within the consolidation, and then we move up, and then we get the retracement into it, and then the expansion to this high. To this high has kind of been taken, but if it was just above both highs, and then a draw on liquidity higher as well. So during a consolidation, when do you expect one? Well, you can expect a consolidation after a high time frame PD array has been met, or a draw on liquidity has been met, or a big move has previously happened and price is slowing down. That is when you're going to see consolidation. Sometimes even after news events, not all, but the high impact ones like NFP and FOMC, CPI, PPI, you're going to see a big candle up or down. Then you're going to see consolidation, and then at the bottom of that consolidation, you're going to see the reversal, and then once you've got the reversal, you're going to see the retracement. So everything plays into everything. Then the final stage of price delivery is the expansion. Now, the expansion is only relevant if the draw on liquidity is still in play. So we can expect these expansion moves when the draw on liquidity has not been met yet. So once it's been met, this expansion is not really on the cards. Once a high time from draw on liquidity has been met, you're going to expect to see this or this or this, but you're not going to expect to expansion. We could be taking a higher time from liquidity, then retrace, but the draw on liquidity is still lower, so then you'd see an expansion move. But if the full draw on liquidity has been taken, you're only going to see the reversal / consolidation. If you're seeing a retracement after the higher time frame draw on liquidity has been met, it is likely that the draw on liquidity that you had is not the final draw on liquidity, which would then lead to seeing this expansion. But if you can get your draw on liquidity right, you will not expect these after it's been taken. You'd expect this and this. So this delivery would be, with the draw on liquidity still higher, we can expect a move quickly into a PD array and move quickly out. We don't want to spend time in here because the draw on liquidity is still up there. We're close. We've made a high near the draw on liquidity. So the next retracement in should be quick. We should come in and bounce because we've got somewhere to be. We've got somewhere to be here. So we shouldn't need to consolidate inside this area. We should just come into it and go. And the way you're going to find the best expansion moves is if you find the most extreme PD array in this leg. So in this case, this is the most extreme PD array, but sometimes we come all the way down. That's when the expansion is going to happen. It's quick. It's the final push. Once we come down to it, we're not going to need to go anywhere else other than up. And that is covered within this video here. Consequent encroachment, coded, precision and gaps. So go and watch that if you haven't. But that is the price side. Time side, all I need to say for time, okay, and I'm not going to speak too much. Electronic hours / forex move something like this. Now, if we're trading NASDAQ, we work off regular trading hours, meaning we work under the New York Stock Exchange Open, which means the opening is this. Now, obviously, you know what time New York opens for NASDAQ, so you can apply the X's where need be. You know what will be here. So, if you understand that the first candle is the New York Stock Exchange open, the next candle will be an hour after that instead of this. Now, this is something that I've discovered a couple weeks ago, and it has completely changed the way I see open, high, low, close, and the way I see everything within time. My prior time knowledge was correct. However, it would only work on Forex/electronic hours. However, with electronic hours and NASDAQ, you kind of want to use regular trading hours because that is when the first tick opens. You can use logic the same on Forex. That's why the Forex moves are the better. So if Forex opens at 7 a.m, you're going to see 7 move lower and up, and then the close at 8. But with NAS and futures and New York Stock Exchange opening, it's different, which I've recently found out. So behind every time aspect of each one, especially this one and also this one, because the reversal happens within consolidation. So these two mainly come under time. Retracements can also happen under time, but the best way to align time is these two. Now, if we're consolidating, it's waiting for what? Probably a new hourly candle to open. So this could be 2 o'clock. This is the low. We then open at 3 o'clock, raid it, move up and go. That was for Forex. Now for NASDAQ, it trades under a different time. So you can apply that. I don't want to give it too much. Use your brain and think. But yeah, that's going to be it for this video. That's all price delivery covered. I will see you guys in the next one, and peace.